Hi everyone, it's Helen from S&B Deal Hunter. Today we have Taylor Wallace with us, an acquisition entrepreneur who's bought multiple doggy daycares. I'm very excited to hear Taylor's story, especially being a dog owner myself. Taylor, it's great to have you on today.
Yeah, it's great to be here. Excited to talk about some puppies with you.
Yeah, I love it. Well, look, Taylor, why don't you introduce yourself, tell us about your background and sort of how you got into doggy daycares.
Yeah, sure. My name's Taylor Wallace. I'm one of the owners at Paws and Rec, which is a dog daycare business in Tampa, Florida. And we're also part of now recently part of Pet Resort Hospitality Group, which is a large doggy daycare platform that we're helping lead. We have six resort brands across the country, 17 locations, see about 2,000 dogs a day across all our businesses. And yeah, I mean, I kind of fell into the dog business. I was a tech guy for about 10 years. I ran startups, worked at a bunch of early stage startups, everything from building mobile apps to crypto to augmented reality and all kinds of fun stuff in there. And in 2020, at the beginning of COVID, I got laid off from a large startup I was working at and was just kind of burnt out on the tech thing and was kind of looking to do something different and wanted to kind of, I love hospitality. I grew up working in restaurants and wanted to kind of get back to something where I could like interact with humans a bit more and have kind of a more like tangible impact on a local community. And my best friend had been my roommate before. He was a GM at a franchise doggy daycare. And he'd really kind of built up that business over the last couple of years for an absentee owner. And we had always said like, hey, someday we'll, do our own doggy daycare. And COVID was kind of the catalyst for us to really think about it. So we got together really not with the goal of being acquisition entrepreneurs. I had no idea what acquisition entrepreneurship was. I'd never heard of Search or ETA. And we just wanted to own a doggy daycare together. And we looked at doing a franchise because that was kind of what he was familiar with. Um, and he liked one franchise because he loved the operations, and I kind of hated the sales and marketing. I liked another one because I loved their sales and marketing, and he hated the operations. And we were kind of like, we sort of have the recipe here. We don't really need a franchise to support us. We sort of know all the pieces of the puzzle. So let's roll our own. And in the process of kind of starting to do that, we stumbled upon a small independent that was for sale in Tampa where we lived, that we ended up acquiring, and we doubled revenue at that first location in about 6 months. So I was working half-time at a venture fund and half-time helping him on the daycare. And after 6 months, we were like, okay, this is a real business. There's something here. So we started looking for another one to acquire. We acquired our second location in the fall of 2021, so about a year after the first. And then it was kind of full steam ahead. I came on full time, and subsequently, yeah, we've done two more and actively kind of building a few more, and now partnered with a private equity group to really blow it out.
Wow, very exciting.
Yeah,
Well, I have a lot of
yeah,
questions.
there's a lot there.
Yeah, no, I love that. I mean, for the first deal, you guys already knew you were going to do doggy daycares, but what kind of attracted you to doggy daycares, and you and your partner, I guess?
Yeah, I mean, my partner, he like took an interim job just as a hourly employee at the local doggy daycare when he was kind of trying to figure out what to do with his life, at a place of change. And I can remember sitting on the back porch with him when we were kind of newly friends, and him kind of laughing like, "Oh, I just got this silly job at a doggy daycare scoop and poop. It's really funny." And he was working. When he started there, the unit he was working at in this franchise system was really struggling. And it got bought shortly after he started by a franchisee who was kind of known for turnarounds in that system. So she identified him as like one of the competent people that worked there, made him the GM, and then really coached him remotely on how to really turn this facility around. So he went from, 5, 10 dogs a day at this massive facility to like 150 dogs a day in a year or two. And meanwhile, I'm running this fledgling software startup, and we're swapping notes like every night on how to build these very different businesses and manage different employees. And we're in our early 20s. We don't know anything about anything. And he's one of my closest friends, and I trust him with my life. And I saw that he was kind of working his ass off, and making a salary and not sort of sharing in the upside of this business. So it was always kind of our dream that like, hey, someday let's figure out how to do this. So for me, it was really like, hey, I want to help my buddy set up a business, and I know a lot about entrepreneurship and how to start a company, and I don't know anything about dogs, so let's figure out how to sort of do this as a partnership, and that was really the catalyst. And for me, it was like, it was more about helping my buddy, and I loved the idea of working with dogs. I thought that sounded like a lot of fun.
No, that makes sense. I guess where were you guys looking for deals for this first business? How'd you end up finding it? Yeah, tell us more about that.
Yeah, I mean, we really weren't looking for deals. Like we were like trying to figure out what's the best way to do a doggy daycare. And one of the franchises we were talking to was trying to convince us to buy an independent. And they wouldn't let us look at it or tell us who it was unless we signed a franchise agreement and paid them 50 grand. So we
Wow.
were basically like, we're not going to do that until we can see the business. We'll sign an agreement that says we won't buy it. If it's not through you. And they were like, no, we're just not going to tell you who it is. But like Tampa's a pretty small town. There was only a handful of doggy daycares here. So we just called them all and, hey, like we're interested in buying a doggy daycare. And the one that was for sale was like, oh, wow, amazing. We're interested in selling ours. And from that first phone call I think we closed in about 45 days. So it was a like sub $1 million deal. It was a pretty small deal. And my first financial model was a joke. I'm not a finance guy. Like I sort of just threw something together in Excel, and we hoped we'd be able to grow it by 10 or 20% in the first year, and we doubled it in 6 months. So it was a good joke.
No, that's great. You mentioned you closed in 45 days. What did that process look like? And I love that you guys just called these folks, by the way. That's awesome.
Yeah, I mean,
Did you find other ones that were looking to sell, by the way, while you were making your rounds, calling all
no,
of
I
them
mean,
up?
what sort of happened was like we kind of identified the one we thought it was, and that was who we called. And then after that first one, well, I guess I'll get into that. But the process to close, I mean, I think what I've seen subsequently is a lot of search entrepreneurs, like they do all the homework, and like we didn't do any of the homework. We had no idea what we were doing. Like we had, I'd worked with a lot of business lawyers in the past, so I called my most trusted business lawyer and was like, "How do I buy a business?" And she threw together a purchase agreement. They were using a broker, and they were kind of packaged for sale, so that helped a lot. Where like we didn't have to do as much due diligence because they really had everything ready. But like my Q of E was me like tying out the bank statements to the P&L, and like it looked sort of right. So okay, I guess this is good. And um uh yeah, and our diligence checklist was like pretty basic. I mean, it was a pretty simple business, right? So there wasn't like that much sophistication to it. Um and we were really lucky because they were relatively absentee, and my partner like really knew how to run the business. So I think with a lot of searchers, what I've seen is, if we were to turn around tomorrow and say, hey, let's go buy an HVAC company, like we would have a lot of risk of not knowing how to do that. And he was basically like, if everybody quits tomorrow and all of the customers leave, like I know how to get more dogs to show up at this place. I've done a lot of internet marketing, and he's like, I know how to make sure we make money if the dogs show up. So we had a lot of confidence that like the worst case scenario was basically their baseline, and there was a lot of upside.
No, that makes a lot of sense and really helpful to have a partner that could just run the show if everything kind of didn't work out for whatever reason,
Totally.
everyone
Yeah. I
just
mean, it
quit.
was now knowing more about search, it's kind of like it's the ultimate hack, right? As if you can have a partner that really has the industry experience. And then subsequently, like we really learned a lot about M&A over the next couple years because we got very active in trying to do more deals. And it's funny because I think we probably got too smart and took a lot less risk than we did on that first deal. And now we know what to look for, and we know how to really underwrite a deal. And we were probably slower to acquire than we were on that first one on our later deals, just because we knew more.
I guess going back to that first deal, you closed in 45 days. How did you guys finance that deal to close so quickly? And how did you guys
Yeah, like
structure the deal with the existing sellers or
we paid all
owners?
cash, so they were basically gone, and we had like a very small transition agreement with them, which we honestly didn't use much because it was sort of, hey, the minute we stepped in, it was like I know how to run the business, he knew how to run the operations, so we didn't really need them for a lot. And then they were pretty absentee, so they had kind of two younger women that were running the business, that are now our kind of two key directors that have stayed on for the last couple of years and have really grown with us. But yeah, structure, I mean, we didn't know. I mean, we sort of knew that the SBA would give funding for these types of businesses, but we'd kind of approached going into daycare with an investor base that I had kind of from my tech background, and you know, friends and family, and basically we came to them. We're like, hey, we want to buy this business, and how should we structure it? So we did essentially like we financed it with private debt and equity kickers. So we borrowed money from investors, and then they got a chunk of equity, and then we owed them the money back. And that was actually how we subsequently structured our additional two deals as well.
That's really smart. I guess, can you speak to that a little bit more specifically? I think, not a lot of people take on sort of private debt with that equity kicker piece. Uh,
It was really like I've never heard of anybody else doing it, and I think it was sort of like, you know, we had friendly investors that were open to it. And we were really keen to structure it initially so that like we could pay down the debt over time if we wanted to, and just cash flow the business, and it would still be a good return for the investors. It also, like in 2020, interest rates were really low. So we had a pretty high interest rate on the debt that was good for the investors that like today would have probably been problematic. Paying like as above market as we were then. And but they got a pretty solid chunk of the equity, for essentially no cash up front other than the fact that their debt was at risk. So in hindsight, like it's ended up working out really well for everybody because they made a great return on their money. And we were able to preserve a decent amount of the business by kind of doing that combo structure. So I guess that's to say like there's a way to do these deals without the SBA if you get creative, if you have access to capital.
Yeah, no, that makes a lot of sense. I guess now that you've sort of, I mean, was your initial goal always to buy multiple? Like, what was the goal going into buying your first doggy daycare? Or did you guys not think much about that?
We kind of approached it one of two ways. Like we were like, we want to own a doggy daycare. I want my friend to kind of be in a better position where he owns a piece of the business he's running day to day. And I kind of approached it as like an investor slash like part-time, you know, finance marketing person that was going to work on this business. And really for the first year, I was working half-time on the dog business and half-time at this venture fund. Um, and we always said, like, if we can build a great company at whatever scale, like, we're going to have a ton of options long term. So it became pretty clear to us after 6 months that, like, this unit was tapped out. Like, we couldn't, it was a pretty small footprint. It's like 3,500 square feet of indoor space, 10,000 square feet of outdoor space. And within 6 months, like, we were on a wait list. We couldn't get any more dogs there. The only way we could make more money out of it was to kind of really squeeze customers in ways that we didn't want to do. So it was like, okay, let's figure out how to do another one. So that was when we kind of really tried to lean into figuring out how to do a search and how to acquire multiple businesses, and when I kind of made the decision that I wanted to step in full time. But we kept that thread of like, hey, let's focus on doing one at a time, and let's just keep building a good culture and a good company. And we'll have options. And yeah, I mean, 3 years later, we partnered with private equity in a home run of a deal for everybody, and it worked out.
That's awesome. I guess for that first deal, what did you guys do to double revenue in the first 6 months?
Yeah, people always ask that question. I mean, there's no like sophisticated answer. It was really like we saw with the footprint of the facility, my buddy was like, "Hey, I can fit a lot more dogs in here safely." And I was like, "I can get you a lot more leads to get more dogs in here." So it was a combination of him really streamlining the operations, of having this, you know, deep experience with one of the biggest franchise players, of learning how to run like a very high volume daycare, that he sort of saw, "Hey, this place is doing, you know, call it 70 dogs a day, and I think I can get 150 in here." And I was like, you know, their marketing is decent, but we can do a lot more. And we can definitely get a lot more dogs to show up, if you can keep them happy. So it was a combination of capacity and marketing.
No, that's really smart. And I guess at what point did you, decide to buy that? I guess no, you spoke about, buying the second one, you were tapped out, but how did you find the second deal and what did that look like? Financed it the same way, I'm assuming, but was it,
Yeah,
also an independent and
we financed it the same way, slightly like better valuation in terms of the equity to debt kind of ratio math we did, just because the business had grown, the first one had grown a lot. It was a bigger business. It was about double the size of the first one, in every way, like from a revenue standpoint, purchase price and square footage. So it had kind of a lot more upside as well. We saw kind of the same issue that there was a capacity problem there and a marketing problem where they just weren't maximizing anything. Um, so that one was one of our investors had taken his dog there for a long time. So he had kind of a long-standing relationship with the owner. And the owner was older and was kind of like he has two locations and you know, I think he was stretched thin between both of them. And I think he was kind of intrigued by the idea of handing the business off to two young guys that wanted to really kind of grow it. And he's very entrepreneurial and you know, I think is kind of slowly retiring and just saw that we were really excited about the business and yeah, we basically did the same thing at the second one as the first is, you know, we doubled revenue in about 6 months, really by just focusing on operations and marketing and, you know, a big part of the operations too is like we do a ton of work on culture and team, and just really trying to make it a fun place to work and do a lot of talent development and show people that this is a place they can grow. I think there's a huge opportunity in small business if you're growing to really give young people like, hey, you can start here, scoop and poop like my partner did. And, you know, in a couple of years, you can be running a facility, you can be working on the marketing team, you can, you know, now be working with us at the corporate level. Because I think at a lot of hourly jobs, like at a, you know, Wawa or a Whole Foods or whatever, like the path forward seems like very far-fetched if there at all. So I think by creating that type of an environment, we've had incredible retention rates, which just overall has helped everything.
Yeah, no, that's, I mean, like giving that opportunity to someone who's working at a doggy daycare is huge. And I haven't heard of that. So that's
Yeah,
awesome. Good for you
yeah,
guys.
it's been fun.
I guess with you know, with that second deal, you now that you've done a couple of them, you know what to look for when you're buying these doggy daycares. You know, what are some of the things you guys look for? Especially, I'm sure a lot of folks, you know, buying their first business who are maybe interested in the doggy daycare space are curious. You know, what are the things you'd look for in your underwriting? What are some of the red flags or just, you know, positives that you look for?
Yeah, I mean, I think one of the things that's really been eye-opening and interesting to me as now like a buyer of doggy daycares is like the amount of reps you do definitively impacts how well you can look at a deal. And it was like that first one, like we had no idea. And then now it's like you can put a doggy daycare sim in front of me and I'll tell you in 5 minutes whether or not it's interesting. And here's the 15 reasons why or why not, just because you've looked at so many of them. So I think as a searcher, like there's something to be said for sort of starting to look at the same types of deals over and over again, because you just can become more and more familiar with that type of business, that industry, whatever. So yeah, I mean, for us, like there's
Let's
sort of
talk
like,
about like those that 5 minutes you looking at a sim. Like, what are the
yeah.
questions you're asking? What are the things you're like, wow, like these are like the first things I'm looking for.
Yeah, I mean, for us, like there's two ways to answer that question. Like at Paws and Rec, when my partner and I were buying these by ourselves, it was really we were looking for a solid footprint. So it's in many ways it's a real estate business, right? Like we don't own the real estate, we don't want to, but we need a great lease and we need a solid footprint in a good location to understand that like this can be a viable business. Most people take their dog to the closest, safest, cleanest place. So like if you're a big brand and you're 10 minutes further away, like if there's a place that's a little bit closer and maybe it's not quite as nice, but the people are cool and it's safe and clean, like they're probably going there. So convenience, location's a big factor. And we've passed on a lot of deals that were like good facilities that we just didn't feel like were in the right areas. Um, we were looking at Paws and Rec for upside, so we really wanted to be able to come in and buy a business at a fair valuation, that we felt like we could add a lot of growth to, both in terms of that same formula of better operations, more dogs, and better marketing and sales. Um, and yeah, I mean the facility then I guess is like besides location is sort of trying to understand like how much work do we think we need to do on this building to get it up to what our standard is. So we'd look at, you know, sometimes you look at a doggy daycare and it's like the biggest expense to building one is usually the kennels. So we have anywhere between 100 and 200 kennels in a facility, and that can be hundreds of thousands of dollars if you build them right. So if you're buying a business that already has those, it's great. It's worth more. If you're buying a business that's using wire crates, and you're going to have to come in and build out a couple hundred grand worth of kennels, that's a different story. Now with the private equity help, we're looking at much bigger businesses. So we're less kind of focused on the, the first one or two deals we did that were small, and we were going to go in and hustle, and now we're much more focused on, can we find like multi-unit operators like us, or can we find really high-end single unit resorts that are pretty well run, that we don't have to come in and kind of do everything from day one, that they can be fairly self-sufficient, and then we can kind of add synergies long term across the platform we're building.
That makes sense. I guess for the first couple that you guys were doing independently, were you guys going in yourselves and fixing it up, or
Oh yeah. Yeah, we were doing everything. I mean, it's the first really the second one was probably the most like elbow grease that we put into a facility, where it was like we knew we had to do a lot of work on the kennels. They needed a lot of work. We had to redo all the turf and all the fencing outside. So we did that like pretty immediately, those two big projects. But like we immediately within day one are like, we're implementing a new CRM, we're implementing a new, dog daycare operating system. We're retraining all the staff. We're dropping in new general managers. Like we overhauled that business in 90 days. So like one of the things I hear people tell searchers all the time is like, don't touch the business for 90 days. And like, we don't, we come in and like, we ripped it out and put our brand and everything in 90 days.
you completely rebranded too? Is that right?
Completely rebranded. Yeah, the three that we acquired, we've fully kind of rebuilt out and rebranded to our model, our brand, and our build out structure.
I think it makes sense for you guys because you already have so much experience, right? It's like you don't need to sit around and wait 90 days.
Yes.
I'm curious though, do you get any pushback from staff for coming in making changes really quickly? Since that's kind of one of the things that people are worried about initially, is like, I don't want to freak everyone out.
Yeah, I mean, one of the things we do is when we've acquired a facility, the first thing we do is we give everybody a small raise, and we tell them like, hey, listen, like we're here. There's going to be a lot of growth opportunity for you. But there's also going to be a new set of expectations. And we're not the prior owners. We're going to do things a little bit differently, and we're going to hold your hand through that. And we'd love you to be involved in that process. But if you don't want to be, like, that's okay too. And this raise is really about kind of like raising the expectations that we're going to expect more from you probably than the prior owners did. So yeah, I mean, we're also not, our staff is not kind of long tenured knowledge workers in any capacity. So we have a lot of confidence that like if someone leaves, we can retrain a new hire pretty quickly. I've seen with a lot of other searchers where you buy like an accounting firm, for example, and you're dealing with a bunch of accountants or bookkeepers, and like, losing one of those people is a little bit of a different challenge than losing a kennel tech.
I'm sure a lot of people want to work with pets, so or
Yeah.
dogs
Yeah, and
specifically. Yeah, so
if we find someone with the right attitude, like we know how to train people to be really, really good in the facility. It's just finding that attitude that wants to be here. So yeah, the risk of for us at Paws and Rec, when we were coming in and really doing these big overhauls, now as we're doing bigger deals, we're looking more at kind of that senior level management. We want to understand like, if we buy this business, we want it to be able to operate without us having to drop in a full team. So we want businesses that really have kind of some level of management capability to run themselves without us having to step in.
no, that makes a lot of sense. I guess one of the things you mentioned is, it seems like being able to add more dogs in is one of the things you were looking for. Is there some sort of like calculation you think about, like dogs per square foot or something?
Totally. Yeah. We look at
Uh,
dogs per square foot. We look at like the number of kennels really dictates, like the simple math without giving too much of our secret sauce away, is there's really two main drivers for the business. You have boarding and daycare, and it kind of varies how that breaks out depending on the region. Like New York City, it's going to be daycare is going to be probably a much higher percentage of revenue than boarding. Whereas I would guess out in East Hampton, it's going to be a lot higher boarding, just because you have people that are kind of coming in and out for the weekend and whatnot. Um, and boarding is purely driven by kennels, right? You can only have one or two dogs per kennel or suite room, whatever. So if you have 100 rooms, like your math on revenue per night is basically 100 dogs a night times whatever that kennel price is. And then you can add on like grooming and training as and a little bit of retail or kind of the next additional revenue streams. But that big chunk of revenue is boarding, and that's really dictated by suites and rooms.
it makes a lot of sense. So do you generally look for daycares where there's more boarding versus daycare, or how do you think about that?
So now, I mean, as we're looking like across the US, it we're kind of agnostic. I mean, daycare generally tends to be a bit more stable,
Oh,
whereas
interesting.
boarding tends to be a little bit more cyclical. Like you get, excuse me, in the summer, people board more because they're traveling. Around the holidays, they board more. Daycare tends to be like if you bring your dog to daycare and you like a facility, you're going to go pretty consistently usually. Um, but daycare is definitely more prevalent in super urban areas where people live in apartments and you get two Bernedoodles living in New York City. Like those dogs are they need to go outside, they need to run around, they need to be with other dogs that are going to drive you nuts. So we Paws and Rec, like our model is much more urban. Like we're in and around downtown Tampa and St. Pete. But some of the brands in our portfolio now are a lot more rural and they do, the revenue numbers are similar to ours, but they just do a lot more boarding business than we do.
Interesting. No, that's super interesting. How do you guys think about like competition? There's so many, like in New York, for example, there's so many doggy daycares. Is pricing an issue that you guys always think about in terms of, is it a race to the bottom there? Or like, how does that work with doggy
Yeah,
daycares?
it depends on the market for sure. But I think generally like the dog ownership has so exploded in the last couple of years that there's still a lot of room for growth in most markets. And we really focus on hospitality above anything. And we kind of think that it's a hospitality business, and if you provide the best service, that people are going to pick you over your competitors. And yeah, I mean it's kind of like it's like the hotel business in some respects. It's like you're always going to have people that want to stay at the cheapest option. Um, you're always going to have people that want to stay at the most expensive option. But we try to kind of cater to the middle of the road, at least at Paws and Rec, and most of our brands are that way. Where we have optionality, you can pay up and get like a crazy sweet experience if you want. But like it's moderately affordable for most people if they want to do daycare or boarding, and uh, we try to differentiate from our competitors, not by price, but by just providing really, really great service.
That makes a lot of sense. I mean, I just think about like personally when I look for a daycare, it's the little things like, oh, do they like send me photos?
Yeah.
And so many people just don't do that. It's so
Yeah.
basic. It's like everyone wants to see their dog. So I'm
What
sure
I
it's
think the thing that's interesting, right? And like you see this in a lot of small business and service businesses, like most people that get into the dog daycare boarding business, they love dogs. And sometimes if you love animals, you maybe don't love people as much. So I think it's the best operators are people I think that really are personable and are people, but also have this deep love and respect for animals. So we really try to marry those two things internally. It's just like making sure that we're really focused on the dog and the dog's experience, but also really focused on the human.
Yeah, I didn't even think about that. That makes a lot of sense. I guess one other question is, what's your take on, I guess, just the franchise route versus independent? It seems like you guys went the independent route, but could have easily gone sort of towards to a franchise too. Or, if someone's trying to get into the space and buy their own doggy daycare, what would you recommend?
Yeah, I mean, I'm sort of like a hipster techie, so I never thought I would ever think about franchising anything as either a franchisor or a franchisee. But when we looked at it initially, I was like pretty intrigued and impressed by the idea of being a franchisee. Um, just because I think if it was just me or just my partner, where you have one clear skill set, whether it's the business side or the ops side, and not the other, I think the franchise becomes really interesting. Like if it was just my partner, he's just an operator, he needs help with kind of the business support, marketing, finance, etc. I think the franchise system would have been great. I think if it was just me and I'm like, hey, I really want to open a doggy daycare. I love dogs and I have a lot of business experience, but I have no idea how to run one. I think they then add a lot of value in terms of how they teach you to operate. But I think when you have both, the question becomes like, what are you paying for? So for us, I think it was really the right move not to do a franchise. But I've consistently like been intrigued by franchising as an operator moving forward and as an investor because I think if you get into the right system at the right phase of growth, it can be a really interesting way to expand quickly. and you can grow fast because you have this sort of additional layer of support. But I think the challenge is it seems to me to be very hard to identify the right franchise system for any business, and to make sure that you're really going to get the level of support and that you're not going to be cannibalized by other franchisees, and that you're going to have kind of an exit option long term as you grow that business.
Yeah, especially since you're paying for it.
Yeah.
So, no, that makes a lot of sense. I guess moving on, I guess tell me more about the private equity partnership. How did that come into play? What does that look like now? I'm super, super interested.
Yeah, so the group we're working with is it's called Pet Resort Hospitality Group. You can check it out at petresorts.love.
Love
And
that domain.
yeah, great. Um, and we've been working on our core values as a team, and one of them is love and community, which we're really excited about because it's we say all the time like pet care is joyful work. And if you don't kind of like have a lot of love and joy for what we do, like you're probably in the wrong business because we're playing with dogs. Um, and yeah, so we started building a facility, a de novo from not the ground up, but we rented an empty space and started building it out after we did that second acquisition, and then we're kind of on the hunt for additional acquisitions. And our investor base was basically telling us like we really want you to focus on Tampa Bay, St. Pete, and adjacent markets. We don't want you guys to get over your skis, get this de novo kind of built out. And that it was the first time that we'd done a build out, either of us in anything. And that process turned out to be a lot more painful than we expected. Um, and at the same time, we bought a third location during that. And we were just kind of getting to a point where it was like, we want to go faster and we have a lot more capacity. And kind of the biggest constraint to that growth is capital. And we've kind of financed these first few deals with the combination of cash flow and kind of friends and family. And we probably need to institutionalize this in some capacity if we want to really like reach our full potential as a brand and as operators. Um, so we weren't looking for it, but then all of a sudden we started getting a lot of phone calls, and there's just not many multi-unit dog daycare businesses in the US. And there's a lot more kind of private equity interest in the space. So we started kind of entertaining some of those calls, and we met PRHG, Pet Resort Hospitality Group, and spent a lot of time with them. They're we're backed by Trivest, which is a pretty well-known established private equity firm out of Miami, and they really work on kind of founder-led businesses, and they've been around since the 80s. And we met with the partners there, and just felt like they were really good people, and they kind of shared our vision for what we could do as a bigger pet resort platform. And you know, we felt like the learning opportunity was going to be really great with them, and we spent like 6 months kind of doing the dance, and kind of got to a point where it was like, all right, we should either do this or we should raise institutional capital. And I think ultimately we wanted to kind of work with a bigger, smarter team. And now we joined together around the same time with six other brands. So we now have six brands in the platform, all operating independently. But what's been really cool is we now have like pretty regular interactions with the other brand leaders. My partner and I are helping at the platform level, so we're helping kind of build out the systems and processes for all of us to kind of work towards moving forward. And it's created this like really interesting experience that's like kind of akin to going to an industry trade show where like you're sharing ideas around your business and your industry, but we're now all co-owners in the same company. So instead of that weird, sometimes you get this like frenemy elbow. I'm sure you've seen it as like at an S&B conference as an investor, like you're sharing ideas with other investors, but at the same time, you're kind of chasing the same deals. Um, like that's not the dynamic at all. It's sort of like if your resort does well, then that impacts my equity and vice versa. And we're all kind of rowing in the same direction. And we all have equity in the holding company rather than in our individual resorts. So it's created this like really fun, like healthy competitive dynamic where we're growing together, and everybody's focused on like how do we just create an incredible pet resort experience across all of these brands, while retaining like our unique DNA. So it's been like a really fun challenge. And yeah, I mean it was my partner and I for 4 years kind of figuring everything out, and now we have a group of really smart other operators, but other business people that are kind of giving us insight and feedback. And um Yeah, I mean, I've heard kind of the full realm of feedback on partnering with private equity, but it's been a really positive experience for us so far, and we're really excited about it.
That's awesome. I feel like most folks that I speak to, it's usually private equity just buys them out and they're kind of out, especially after, I mean, after initial period of time. What did that look like for you guys? Did they actually buy you guys out a little bit, or you got sort of shares? You mentioned you sort of all own, part of the holding company. What did that look like for you guys, or what made that deal attractive?
Yeah, I mean, we made it very clear in the beginning when we started talking to them that like we had no interest in exiting the business. So the only way we were going to do this is if we were going to continue to be involved for the long term because we feel like we're just getting started kind of building this. And so I can't really get into the specifics of the deal, but yeah, I mean it the deal shook out to where it made a lot of sense for us now and over the long term to be here and continue um building with them. So yeah, and I think that is not super common, but I think for the right brand, it can work. Um, so yeah, that's kind of how it shook out for us.
No, it's super exciting. And what's the plan now? Like moving forward, what are some of your goals with, I guess, the larger holding company?
Yeah, I mean, we very much want to build the best pet resort company in the world. And starting in North America, really the pet resort business is mostly in North America. There's sort of like little pockets of it around the world, but predominantly in North America. So that's where we're focused for now. But yeah, I mean, we're very quickly becoming one of the largest platforms in the space with 17 resorts. Have a lot more kind of going on in the background that there we'll be talking about soon. But yeah, I mean, we want to partner with more folks like us that are kind of there's really two types of pet resort owner. You get someone like my partner and I that are young and hungry, and we've maybe hit a ceiling in terms of capital because these businesses are pretty capital intensive. It's not like opening a fast casual restaurant where you can build one out for a couple $100,000. Like to build a solid pet resort is expensive. So you meet a lot of young operators that have maybe one or two units and they really would love to be able to do more. So in that capacity, we've created a structure where people can stay around like we did. Like we want young people that want to be involved and want to keep growing the business. And I think of the 6 brands we have, at least 4 of them, the operators are still very much involved like we are. But then there's also people that have been doing this for like 20, 30 years and they want to retire. And now we have a really solid team that if somebody wants to retire, like ideally their resort can still run itself. But we have people that we can kind of bring in to help support that. And then we give your team kind of an opportunity for growth. So we think we have a pretty compelling pitch to other resort owners that want to do more or want to retire. And yeah, we're going to kind of keep running it that hard. And then we're going to build our own units.
No, that makes sense. When you say resort, I love that doggy resort. I
Yeah.
mean, do
Doggy
you
daycare, like kennel, pet resort. I mean, we've kind of codified around the pet resort language because of the name of the holding company.
and are you
But
guys buying other like adjacent types of sort of dog businesses or just daycare?
we're
Uh,
mostly focused on daycare, boarding, grooming, and training. With daycare and boarding being the core focus. But we're going to be opportunistic. So, if something pops up that's kind of interesting and plugs in, but like the 2 of our founders, they got their start in a vet roll up. So they bought 14 veterinary clinics that actually had a daycare component to them, and that's sort of how they got intrigued by the daycare. But we're probably going to kind of stay away from vet services and retail is not a big focus for us either. We'll do some minor retail in the resorts, but we probably wouldn't buy a pet food store. Um, but yeah, I mean, we'll see where it goes. I mean, we're definitely kind of like very opportunistic, but focused on daycare, boarding, grooming, training.
no, that makes sense. But what did your day-to-day look like, before selling to private equity? When you were at the point where you're running two, I guess building up a third one versus now.
Yeah, I mean, it's the I would say like my work hasn't changed that dramatically. I was very focused on finding new targets, and then kind of managing our internal like marketing systems, finance teams. I did all the HR stuff myself. So a lot of the like nitty-gritty stuff I was doing, like I don't manage our accounting anymore. We have an accounting team. I'm not doing like our budgets as in depth as I was before. Like our finance team is helping with that. Um, we have an M&A team, right? So it's and I support that M&A team, but like I'm not the guy calling every daycare. I was kind of wearing every business operations hat, whereas my and similar with my partner, he was wearing sort of every day-to-day operations hat leading our team. So we have a lot of support there, and then we've kind of gotten a little bit more specialized across the platform where I'm leading marketing and strategy for all six of the brands. So I'm really kind of helping lay the foundation for like, okay, strategically, what are we doing here? And then also like, how are we supporting the marketing of all of these businesses while also making sure that our business is still moving forward. So it's been in many ways like just doing what we were doing before, but bigger and kind of more focused on what our actual skills are. Um, so yeah, it's like modeling. I should not be modeling anything, and now I'm not.
Yeah, no, I mean, people definitely are good at not, I guess for me, I'm not good at everything. I think
Yeah,
that a lot of entrepreneurs feel the same way. So that's great that you're now able to be in a position where you're working on what, you're naturally good at. So
yeah.
that's very exciting. I guess what are, what are you sort of looking forward to, the next 5 to 10 years? Do you think you'll be, continuing to work on this, buying more businesses, um, staying in sort of like the doggy daycare space, or
Yeah,
yeah,
I
what
mean,
are
I'm hyper focused for call it the next, 5 to 7 years on this business. But I'm also a classic entrepreneur with shiny object syndrome, so I'm generally doing tinkering with something. Um, and I've gotten really excited by this search ETA small business buyer space. Doing a lot of kind of work around that. I've invested in a couple deals. Um, uh, and yeah, just having a lot of fun in and around that community without like needing anything from it. I've just kind of enjoyed participating in it and want to kind of do more of that long term, I think. And yeah, one of the reasons why I wanted to partner with private equity too is like I had never really thought about buying a business before I did it a couple times. And I've just seen the opportunity there and like I love it. I think it's a lot of fun and I think it creates a ton of opportunity for people and would love to kind of see how the big boys do it. That was the part of the driver for this, and I'm learning a lot there, and hopefully long term have an opportunity to kind of keep leveraging that and be more involved in kind of the M&A and small business acquisition space.
And I'm curious, is buying a business everything you expected it to be? Um,
Oh man. Yeah, I mean, it's way different, I think, than I imagined. Like, if you would have told me when I was living in Miami, working in a very high-tech augmented reality startup in 2019, that, in 2024, I'd be sitting in an office like this, surrounded by Dalmatian pictures, managing 17 pet resorts, I would have laughed you out of the room. Um, but no, I mean, I think entrepreneurship and business in general are this like big grand adventure, and um, if you approach it that way and you're smart and opportunistic, like it takes you in very interesting places you didn't expect. And I think that part of it's been exactly what I would hope for and more. And yeah, just it's been I think the transition away from tech has also been really refreshing of just like working with young people that are super excited about dogs is like is has been a blast. Um I'll share kind of this story that I like to share is I was for a couple years I was a digital nomad. And
oh, whereabouts? I was too. Where'd you travel?
I was around Europe for about a year, and then I jumped between San Francisco and LA for about a year, and then South Florida, and I did a season skiing in Wyoming. So I kind of just like bopped all over. Um, but I was at this like very fancy dinner in Germany, and I meet this guy who like very clearly is an investment banker, and I'm kind of asking him like, what do you do with your life? And I'm expecting him to tell me he's a banker or something similar, and he's like, I'm in ice cream. And I was like, ice cream? Like, you don't look like an ice cream guy. Like, what's the story there? And he was like, well, I was an investment banker. And I was 30 and I looked in the mirror one morning and I was like, Hans, is this what you're going to do with the rest of your life? You're going to be an investment banker and stare at spreadsheets? And not that there's anything wrong with that, but no, I wasn't fulfilled by that. And, I need to find something that's going to make me happy. And I stepped back and was like, what's going to make me happy? I'm not really sure, but what makes other people happy? Ice cream. Ice cream makes other people happy. And now I own the largest chain of ice cream stores in Eastern Europe. And
Wow.
I sort of like heard this, met this guy, and I was like, wow, that's a great story. Like, what's my ice cream? And I had that rattling around in my head the last couple years I was in tech, and I finally found my ice cream, and it barks.
Hey, I love that. I love that story. Thanks for sharing.
Yeah.
I want to be sensitive of time. I know we're sort of getting close to the end now, but any final words of wisdom, especially for the first time business buyers out there or folks that, currently work in tech and, want to get out.
Yeah, I mean, I think like following up on that story, I think a lot of people get really excited about the idea of buying a business. And like my story is really about like buying a business that I could get excited about, but also that like, I had this partner that was very clearly a fantastic operator in that specific vertical. So I would just tell people to like really think through that. Of is the business that you're buying something that like you're gonna have a passion for? Do you want to get in and learn the ops? Do you have someone that you're working with that does or has that background and experience? And like for me, like I'm not ever going to buy an HVAC company. Like it might be the best business in the world, but as someone who's still very much in the operating seat, like I want to operate in and around things that I'm going to find fun and entertaining and kind of fit my skill set and my view of the world. So I would just encourage people that like don't fall in love with the idea of ETA. If you're gonna be operating, fall in love with the idea of buying a business that fits who you are.
That's great advice. I guess final question for me, how many dogs do you have? Tell us about your dogs.
Yeah, so that's my dog back there, the one in front. Her name is Bessie. She's a Dalmatian, and the other dog is my business partner's dog, Margot. And they are littermate sisters. And yeah, when we started Paws and Rec or bought the first one, we were two single 30-year-old guys with no dogs that owned a doggy daycare, and we were like, this is kind of weird. We probably need dogs. And my partner was the dog guy, and I was like, well, what kind of dog should we get? And he was like, I've always wanted Dalmatians, so I trusted him. And little did I know how intense Dalmatians are, but they're awesome. They're very, very high energy, but super loving, really, really fun dogs. And they've grown up at daycare. They're here, almost every day while we're in the office and surrounded by lots of other dogs, and they're fully obsessed with each other, which is also fun.
I love that. That's great. And I'm sure the other 99 Dalmatians are somewhere in your other doggy
Totally.
daycares.
We get like influxes sometimes where some of the daycares will have like 6 or 7 Dalmatians at once, and we'll get these like really great photos of all the Dalmatians playing together.
That's great. That's awesome. Okay, actually, one last question. If people want to reach out to you, where can they find you? Email, Twitter, or X now. What is
Yeah,
best?
Twitter X is the best way to find me. It's just at Taywall. And yeah, I'm pretty responsive on there. Happy to chat.
Awesome. Well, Taylor, thank you so much for your time today. Really enjoyed interviewing you, really enjoyed hearing your story. Thank you so much for your time.
Likewise, enjoyed it as well.